We've seen a dramatic shift in policy from Donald Trump. A 90-day pause on the higher rate of tariffs he imposed on more than 70 countries, but even tougher tariffs on China. Another rollercoaster day for the world economy, and it all changed while we were recording this episode of Newscast. So let's talk about the latest on the markets in the real economy as well. Dharshini David, Deputy Economics Editor, is here. Hello.
Hello.
And on the line from New York, Erin Delmore, North America Business Correspondent. Hi, Erin.
Hello.
Right. Thank you both very much. You have both been unbelievably busy today. Dharshini, why? Can you just recap in a nutshell what's going on?
Why have we been busy? Wow,
Exactly.
Where to start, eh? What has been going on? Well, I've described this as, you know how first time we had President Trump saying, I'm going to build a wall, keep the people out. Well, he's effectively built a trade wall overnight, an extra high trade wall, so to speak, with the highest level of effective tariffs, which American importers, of course, have to pay for around 100 years or thereabouts, perhaps even more. And that is intended to reduce the flow of goods coming one way and stop the jobs going the other way. And that, of course, is sending shockwaves around the globe because it's actually here and now. And then we've got China saying, you know what, we're doubling down too. So, and in the middle of all this are all these countries and caught in the crossfire. And then we've got the markets still on the slide and going slightly interestingly crazy.
And Erin, you've been particularly watching the markets there in New York City today. What's happening there?
Crazy is a good word. Volatility is the word that I keep saying over and over again. Dharshini, I love the wall example because, the idea that President Trump could rewrite the global trade world order just overnight, it feels like, to a lot of investors, really took them off guard. And I think the catalyzing moment was when he came out with those big charts showing the different tariff rates that he perceives other countries as charging the U.S., which are far larger than any reported government numbers. And he came up with the U.S.'s own, what he calls reciprocal tariff rate. Well, I talked to traders on Wall Street, and they said that came in way above what they thought was coming. Maybe a 10% baseline tariff for all countries was what they thought. And that's why we started to see markets tank at the tail end of last week. Really sharp nosedive drop-offs. That was the story on Thursday and Friday. Welcome to a new trading week where Monday, Tuesday, sure enough, still on Wednesday, we're seeing a lot of volatility. These big swings, you could see an index close to 5 points up and then fall 4% by the end of the trading day. That's so unusual. And even now, I'm watching, the major American indexes throughout the course of the day, and they are flipping from negative to positive territory and back again. We had some flatness in the afternoon. It is really just a remarkable story of investors trying to find their footing in a turbulent market and grabbing onto any word they can from Trump's economic advisors about what comes next.
Dharshini, tell me, as a non-economist, what the bond market is, please, and why it matters here.
I'm so glad you care, James. The bond market.
Newscasters care, Dharshini.
Care deeply. This is why we love our newscasters, right? They care about the important stuff. Yeah, so bond markets, government bonds are the way that most governments, including the government here, the government in America, borrow in financial markets, and investors, some of them sort of funds, some of them countries, like to sort of hold on to these things, particularly in times of strife, because guess what? They seem to be seen as fairly safe investments, right? The American government is pretty good for its word. You're going to get your money back. So when things are tough and you're looking at stock markets, doing what's, we talked about volatility, gyrations, oscillations, whatever you want to call it. When they're doing that, you tend to put money into your bonds, right? What we've seen happening over the last day or so is a really strange thing. Money has been coming out of US bonds. And that tends to, pushes their price down, pushes up, conversely, borrowing costs potentially for governments. But the big worry is who is actually doing this? And no one is quite clear at the moment. But one of the biggest customers for American bonds is, guess who? China. And there is a concern that perhaps China is pulling back in the hope of destabilizing America that way. Is this another form of retaliation? Nobody is quite clear at the moment. And as it stands at the moment, there are other buyers out there who are picking up these bonds. 10% of the bond market changes hands every week. This is something that happens, but we've seen an unusual move here, and that's thrown up some question marks and some alarm bells are ringing. And if those borrowing costs remain elevated, obviously that's bad news for governments.
Well, and one newscaster at least has picked up on this, and sadly we don't have a name, but someone's been in touch via WhatsApp saying what would happen if China were to dump the $600 billion US government bonds. So that's interesting that other people are noticing that.
They are, and there is appetite out there. But don't forget, we have seen central banks intervening in markets before. And some of the people I've been talking to on this side of the Atlantic, some of the people working in the city, say we are poised perhaps for there to be an intervention from the central bank, which will jump in perhaps and do some support of its own, buy up some bonds itself to try and shore up the market. We don't know if that will happen, but that could be an emergency backstop.
Erin, I saw you a second ago glancing off at what I assume is a screen full of numbers and data and very complicated information. Do you have the bond markets on the US Treasuries, I think you call them? Is that right? US Treasuries?
You know what? I wish I did. I don't have it in front of me right
okay,
now.
That's fair enough.
Let me see if I can conjure that up for you.
She's got every other number in the universe at her fingertips. It's amazing.
I know, no kidding. I have the 10-year at my fingertips right now, right? And we're seeing up 4.3. We could call it about 4.4%. Again, the 10-year is spiked. It has spiked above 4.5% earlier today.
When you say the 10-year, Erin, just to be clear, as I say, for someone who doesn't necessarily understand all of this, that's me, does that mean you get your money back after a decade? That's when they pay you back?
I mean, Dharshini backstopped me, but that is the time frame. That's the time horizon on the bond, yeah?
Yeah, absolutely. And 10 years are a popular form of borrowing, lending, depending which side of the fence you're on. And these things matter because, when we talk about what's happening with bond prices here, you'll remember, James, that cast your mind back to the dim and distant past and that mini budget from Liz Truss. And we talked a lot about bonds then because they also influence other forms of borrowing costs as well, including mortgages in this country. So that's one of the reasons why we care about these things so much. But sorry, I interrupted Erin there, who was sort of, masterfully going through all those numbers and finding them.
I'll point out that earlier today, I was speaking to somebody about this and about the suspicion that China might be selling off some of these government bonds. Again, China holds some $750 billion worth of U.S. bonds. For me, it really illustrates this point that the trade war could involve weapons that aren't just tariffs. We've all been sitting here talking about tariff rates from country to country. Okay, 34% on China. China matches and doubles. And then President Trump invites another 50%, totaling to 104. We've really just been dealing in absolute terms here, but that's not how global trade works. And it's come into stark relief. I've been watching the Senate Finance Committee's hearing today with the U.S. Trade Rep, Jamieson Greer, and they're not focused necessarily on the numbers, the way that I look at them, the nuts and bolts. They're focused on what it means for their constituents. Those are their voters who keep them in office and decide every 2 years for the House of Representatives or every 6 years for the Senate whether or not to keep their representatives in office. And as Dharshini mentioned, they're talking about mortgage rates. They're talking about the health of corporations as a whole, such that are we going to see layoffs down the line? Could people lose their jobs? They're really distilling into the contagion effect here in the wider economy. And that's a conversation that we weren't having at the tail end of last week.
Yeah, and to come back just for a second to Liz Truss, it's not just here, Dharshini, that people are talking about Liz Truss. I've got a couple of articles here from the New York Times. US bond sell-off is another worrisome echo of the Liz Truss fiasco, is one of the headlines in the New York Times. That's today's article, saying that the parallels between President Trump and Liz Truss are growing starker. So, Erin, that is interesting that there's that comparison's being made not just in the UK, but by an American newspaper as well.
Yes, I will point out that you need to look here at the politics on a bit of a different level, right? And that's because we're seeing a different appetite in Congress to really be checking the president on some of these expansions of executive power than we've seen in years past. President Trump has Teflon support, really just absolute a strong hold and a strong supportive base from Republicans in Congress here. And in fact, these trade authorities that he's putting into effect here are a power that used to rest with Congress. And Congress does seem at the moment fairly content to leave it in the president's hands, save for an effort by some half dozen Republicans in the Senate, handful of Republicans in the House that are looking to check the president's power. So I do think even when we talk to constituents here in the States, even people who acknowledge, as President Trump says, that there could be some short-term pain, they're sticking with the president. There is a lot of support here for President Trump and his policies.
And I remember, it's a question for both of you really, when I was in the States in President Trump's first term, I traveled to Montana when some tariffs came in at that point, when he imposed tariffs. And I remember being on a big combine harvester riding through these beautiful fields with a farmer who was saying she was naturally a Republican, as many farmers are, but she was really worried about the impact on her business of Donald Trump's decision to bring in tariffs, which she was going to lead to, a tit for tat. And I presume, both of you, that's Dharshini first, that is must be a concern for American businesses again.
Totally. And when you talk about farmers in particular, we know that when China has retaliated before, it goes for soybeans. It buys an awful lot of soybeans, for example, from the US. So hitting that is a way of hitting the constituents who really matter. And it is the agricultural lobby who are quite powerful. And incidentally, when we talk about trade deals as well, and we talk about sticking points, and if you talk to anyone who's been involved in previous negotiations, or indeed the current ones between the UK and the US, agriculture always comes up as one of those really sticky bits that you leave until the last moment, because that is something that really does matter politically to Americans.
Yeah, I'm reminded of a story that I did with a farmer in Louisiana, and he was farming sugarcane. And we talked for a while about how tight the margins are in that business and how the input costs have just skyrocketed. A thing we don't talk about often is about how the cost of fertilizer, which is used to grow so many of the crops here in the U.S., skyrocketed after Russia's war with Ukraine got off. And so we're really seeing that community squeezed, and not just the Chinese tariffs that went into effect, but we're also seeing the tariff package from China involves poultry, grains, other farm products. And so it is coming out from all sides.
Now, as we're speaking, some breaking news. Donald Trump has posted on his social media platform, Truth Social. It's quite long, but I think it matters. So let's quickly go through it. Based on the lack of respect that China has shown to the world's markets, not the US, I'm hereby raising the tariff charge to China by the US to 125%, effective immediately. He goes on to complain about China ripping off the US and saying, hopefully they realise that's no longer acceptable. He then goes on to say, based on the fact that more than 75 countries have called various representatives of the US to negotiate, and that these countries have not, at my strong suggestion, retaliated against the US, I have authorised a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. So if I understand that correctly, there's going to be a 125% tariff on China right now, always really been his primary target in this trade war, you could say. And every other nation in the world is now back to what is already the tariff on the UK and many other nations, which is 10% from this moment. I think that's correct.
Those poor import agents who've only just been figuring out how to deal with this additional tariffs now, how to think about something else, it sounds like. That is fascinating. And I think that really goes to show how the president is approaching this. I was chatting to some of the people who've worked with him on trade policy before. And I said, where does this go? At what point do we see a retreat? At what point does the wall get modified or come down? And they said, what's getting his back up is he is waiting for countries to come to him and have these negotiations. So expect movement there. And that's exactly what it sounds like we're seeing here. But for those who come and try and rattle his cage, we are going to see ever more retaliation. Try and teach the others a lesson. So that is huge. Obviously, for China, this is disastrous, if that is the case. For American consumers, that is disastrous. There is 4 times as many goods going from China to America as the other way round. But we have to wait and see, obviously, how this plays out.
And interestingly, this is now 28 minutes past 6 here in the UK on Wednesday evening. And what Donald Trump has just said, just with a push of a button, it's unbelievable change that can ripple through the world economy. It's incredible, the power, really, when you think about it. But that's on top of, or at least follows on from what he said last night. Let's just quickly listen to this, because it's quite interesting to hear what he said.
I'm telling you, these countries are calling us up, kissing my ass. They are dying to make a deal. Please, sir, make a deal. I'll do anything, sir. And then I'll see some rebel Republican, some guy that wants to grandstand, say, I think that Congress should take over negotiations. Let me tell you, you don't negotiate like I negotiate.
Erin, it's really interesting listening to that again now in the context of what's just happened, to wonder if President Trump was laying the groundwork for what he's now announced, saying, oh, yeah, I'm winning. These countries are all coming, basically crawling to me. I won't use his phrase, but, as he put it more bluntly than that. It's interesting, isn't it?
It is really just in the eye of the beholder. I mean, was he laying the groundwork for a negotiation and setting the benchmark so high so that he left himself a lot of room to negotiate? Or was he affected by pressure that the stock market has been under? I mean, it's just been a tinderbox ready to explode for the last 4 days. Or was it pressure from Republicans or from business leaders over the weekend? I don't know which of those it was. But if you saw my eyes basically popping out of my head a couple of minutes ago, it's because it's because I was immediately checking the markets. And, the eye-popping numbers, I'll give them to you right now. The Nasdaq up now 6.78%. I saw that number higher a minute ago. The S&P up 5.5%. Dow Jones up around 5%. The Dow is up, let me do this math fast, about 2,400 points at one point. Right now, about 1,850. The Nasdaq was up 8% just a couple of moments ago.
They are enormous shifts.
We have not seen these numbers. Yeah, it's an enormous swing. It's an enormous swing. And what that represents, just to put this into stark relief for everybody, is investors buying back in, snatching up more stocks. And that's the rush, right? People always try to buy the dip. They try to buy stock prices when they're lower. If you can get something at a low price and it's in your pocket, you call that a win. And you hope that it'll be worth more, in this case, within a matter of moments. It's a wild reversal. And it's not an outlier. We've seen wild reversals all day, but this is the most significant development yet, at least for the U.S. stock market.
It definitely is the most significant development yet, and there'll be countries around the world, clearly, who will be adjusting to this news. And it's a real opportunity for some of them. The likes of Vietnam and Cambodia, we've been talking about this previously on Newscast, they did very well during Trump's first term because China was disadvantaged. They got in there, increased their market share in America, and got penalized for it with these tariffs. Now, of course, they'll be thinking, get in there. Now that China is facing bigger penalties, this is an opportunity for us. But, what a pivot. It's been absolutely
extraordinary. Let me jump in there, though. One company I want to bring up is Nike, right? Nike is a company that moved its operations out of China because back in 2018, tensions between Beijing and Washington frosted over, and that is what President Trump in that first administration asked of companies like Nike. So Nike moved, and, in 2024, 50% of its shoes, its footwear was made in Vietnam, 30% of its apparel. And then suddenly we saw an upper 40 percentile tariff slapped on Vietnam in the middle of last week. So the question becomes, what does a company like Nike do? The choices are start to build supply chains and production facilities outside of their new home, or wait and sit tight. We are seeing now with the tariffs dropping off for a 90-day pause how that benefits companies like Nike. But, take another hand, Apple, a company that's heavily exposed in China, bad news for Apple. It really just shows you have real business leaders making real decisions around these moves. And I think what they're being taught throughout this episode is to sit and wait, to never think that you have maybe the final word or the last word from the administration.
Which is extraordinary, because I was hearing from an American CFO, in fact, just recently. I said, and this is a major company, how do you plan for this? Because, as Erin says, right, you have to make decisions about where you site yourselves, where you produce, how much you produce, who you're producing for. And, the message that a lot of them had from the administration was, except that this is where we're going to be in the long term. 20 or 30 years, this is what it's going to look like. Nobody's going to backtrack from this greater protectionism. We're going to see some level of tariffs. There's going to be incentives to produce more in America. And then we get this at the stroke of a pen or a push of a button or however we want to put it. And what do you do then? Because you have to pivot. You have to work out what you're going to do. And that causes inertia in the business world. So that risk of recession, I'm afraid to say, he may be doing this. It doesn't disappear.
Right. Well, this has certainly been eventful.
Can I put a question to Dharshini here?
Yeah, sorry, go on, Erin.
Yeah, I'd love to put a question to Dharshini here because by my read, the U.S. unemployment rate is in the low 4 percentile at this point. We saw it tick up ever so slightly just about 2 Fridays ago when the jobs report came out, but that's low. We consider that near full employment here in the United States. And so if the president does intend to bring a lot of these production jobs, factory jobs back to the U.S., who is leaving their current job to take these jobs?
That is a really good question, Erin, and something that a lot of business leaders I've spoken to are asking as well. And it's not just jobs, is it? It's skilled jobs. Who are you going to find to do these skilled jobs at the kind of wages that would make America competitive? Are we going to have to see more migration? That doesn't seem to be on the cards. And also, if you talk to the administration, some of them say, well, we need to see more capital investment by businesses, make us more productive, get more robots in there like China does. Where is the money and the incentive to do that coming from? Because again, we come back to this idea of an uncertain landscape and who is going to sort of front up the cash to do that here. But ultimately, that is a huge question. Where are those jobs going to come from? And how much are they going to be paid? I mean, if you're still getting $14 an hour in China and it's costing you $50 an hour in America to employ a manufacturing worker, how do you compete?
I also wonder how this will affect something that we've been talking about on Newscast this week, which is Chinese goods being sent through other countries and repackaged, rebranded to not count as Chinese goods there. Your Vietnams and I think Thailand and some other Asian countries, Dharshini. Be interesting to see. I'm not sure how that's going to play out now, but that's been a big part of this argument, hasn't it?
And that is why, one of many, many reasons that we could talk about this all night. And, and it's very uncertain what is going to happen because there's all of these various factors to consider. And we haven't even talked about services yet, right? Because they're not subject to tariffs. But I was talking to somebody earlier on about the advertising industry and said there's a real fear around the globe because they know that when companies cut their budgets, they're first in line to lose out. So forget the tariffs. This contagion, as Erin was talking about earlier, the contagion effect is something everybody's very worried about. And simply saying we're going to pause these tariffs in 90 days doesn't make that go away.
No. Now, I want to ask you about something else. And to a certain extent, events have overtaken this, but it was interesting. You were at the Bank of England.
I was at the Bank of England, yes.
Which I hear it's all very cloak and dagger, and do you not have to give? Do you have to hand out in your phone and go into a secret room or something? How does it work?
I often feel like I need counselling when I come out of those. You know how absolutely gorgeous that building is, and you go and it's all gilt and it's beautiful and marble and this. And I don't know whether it's because we're journalists. You get led through all of this and then down into a dungeon, basically, and you have to lock up your devices, and there's a security guard standing over you. And this basement room it felt like a war room today, but we were there talking about what is actually a regular event, is that they've got a financial policy committee who worry about financial stability on our behalf. They meet and they were talking about the risks there. And, we've talked about a lot of worrying things. Well, the good news is they say our financial system is very resilient, that it's capable of dealing with shocks. And we partially have the 2008 financial crisis to thank for that. And that British households are looking pretty resilient. Here's something that we don't really clock very often. The level of our debt as households relative to our income is actually at its lowest than since 2001, I think. So, we're not doing badly, and that means we're actually in a pretty safe place. Businesses, however, who are borrowing very heavily, they may be in for a riskier time of it. They try to sort of refinance. Apart from that, it was quite a reassuring mood. Having said that, they were talking about the risk of further falls in the market and that being a real worry. So,
I thought all of that, the language used on that in terms of what was happening with tariffs was far from reassuring. Things like the global risk environment has deteriorated, uncertainty has intensified, risky asset prices have declined sharply, probability of adverse events and the potential severity of their impact has risen. all sounded quite worrying.
It
that
does,
stuff.
but that is their job, though. They worry so that we don't have to. Put it that way. But when you actually talk to them in person, they do sound a lot more relaxed because this is what they do. They monitor risks, and if you get right down to the bottom of that page, they talk about the fact that households and businesses are actually in a pretty stable and resilient state, and the financial system is there and it's well cushioned if there are any shocks.
Erin,
reassuring.
Sorry, Dharshini. Erin, what if anything, what's the US central bank saying?
Yeah, well, the U.S. central bank is under a bit of pressure from the Trump administration. I mean, we've seen President Trump go to social media and say directly that he wants to see a cut in interest rates. He thinks that that will benefit the American public. It's something that he thinks will bring down costs for the American consumer broadly. The central bank here has two mandates, right? They need to ensure price stability, and they also want to ensure maximum employment. And so they're watching to see what that contagion effect is to the wider economy. They're still on a path to bring interest rates down to 2%, and they've chosen in the last couple of meetings to hold off making any changes. But yes, this squeezes them for all of the reasons that we've mentioned today.
Why doesn't the Bank of England have that mandate to look at employment only to look at inflation? Is that right, Dharshini, when it comes to
It's to
setting
look
interest
primarily at
rates?
inflation. It has to sort of take it has to have a sense of other things that are going on. But it's up to the Chancellor, frankly, to set the mandate. Here, by contrast, we are probably looking, according to the markets, and they sometimes get it wrong, but as it stands right now, they're expecting 4 more interest rate cuts from the Bank of England this year because of that weaker growth outlook, but also because the inflation outlook here may be more benign than we previously thought because the likes of oil prices are falling and we may see more cheap imports coming through from the likes of China.
I mean, I wouldn't like to predict anything at the moment, though, with Donald Trump changing things every, minute by pressing buttons. Last thing, the price of oil dropped this afternoon quite sharply. Brent crude. Why do we always talk about Brent crude? But the Brent oil field doesn't even exist anymore. It's being decommissioned.
Oh, stop spoiling the fun. I mean, there is also a US type of oil that we talk about as well. But Brent crude has become...
Texas Intermediate.
Very good.
Thanks.
But Brent has become the benchmark, so to speak. So we like to talk about it. And it's an easy one for us to measure. And it has fallen because, obviously, when you get that heightened risk of global recession, there tends to be less demand for the likes of energy, particularly when it's China in the firing line, right? So hence why you see oil prices going lower. Interestingly enough, some economists I've talked to have said we are not lowering our forecasts right now for the oil price because things are moving so quickly. There's all sorts of moving parts here. We could see some reversal of tariffs. So this could be, things could move up from here. We just don't know. But in the short term, should be some relief for motorists at least.
And just one final question to you, Erin. And we don't have time to talk about this in detail. I'm sure we'll come back to it on Newscast. But a trade deal between the United States and the United Kingdom, does anyone on your side of the Atlantic there talk about that? Is that a thing?
I'll point out that it has gotten lost under some of the bigger headlines that we've seen over the last couple of weeks here. Most of the conversation when I go out and I talk to consumers, constituents, voters, is that they have their eye on China. I'll be frank with you. And really, it's something that helped propel Donald Trump to the White House. I mean, they think that the U.S. is being ripped off by China. This is really a narrative that President Trump has been able to put out and really get into the minds and the hearts of voters. And I'll say, from my reporting, I dare say that it crowds out some of the relationships with other countries.
Erin, it's lovely to talk to you. Thank you so much.
Thank you.
Dharshini, lovely to see you as always as well. Thank you.
Thank you.
So that took rather a lot of big twists and turns, that episode. Scream if you want to go faster. We'll be back very soon with another episode of Newscast. Bye-bye.